following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. It's Friday, and it's freezing, even colder everywhere, especially here in North Carolina. We're looking at the S&Ps, and we're going to take a look at what happened yesterday, which was we had this orange bar that we talked about. That indicates we may have a new profile attempting to appear, then may appear on the following day, and lo and behold, we finally got that. And this is our daily view here. Wow, somebody's saying it's 32 in the Tampa area. That's incredible. I used to live in Sarasota. That is really cold down there for that area. And as we look at this now, the 2099.50, actually, this profile appeared after the close yesterday, had the opening, went up and touched it. And let me see, we hit it almost to the tick, 2098.50. Unfair house 2099.50, and now we're selling off about 10 points, 2090.50. If you guys have real-time quotes, you're seeing that. Bottom of the box on the dailies is 2074.30. Now, remember yesterday we talked about, and I want to review this a little bit just from an educational standpoint, how the breadth on the dailies were showing new boxes attempting to appear 12%. We'll get into what that means in just a second. But we talked about the 2072 rounded off, possibly a revisit, and it's not time to continue to go long. Based on that orange bar on the daily, new profile now appearing, that 12% breadth indication that I will review in just a second, and the ability for this to close above weekly profiles and possibly go back and retest it at the very least, and trying to find a better battle point area for longs and stops and possible reverses around that 2072 rounded off area. And now we've got this daily 2074. So you got a neighborhood down there between 2071.75 and 2074, about a 2-point spread there. That's going to be decent support now, and what the market may gravitate down to, for you to kind of gather your thoughts and not just kind of flail in the wind up here and start buying things. I think we have a caller already, John, out of Philadelphia. Are you there, John?
John, I am. When you flying over to warm Philippines, man?
I keep delaying it because there's so many things going on here that as far as the ice and the cold and the animals I got to deal with here, and, and the chickens and all that kind of jazz. And also I wanted to go down and see Tom in Clearwater before I leave. So I'm going to go down there Sunday night. I'll be doing the show from Clearwater on Monday morning, which is going to be really a treat. And you guys will get to see how much weight I've gained since I've been in the States. It's always a nice experiment to see how many biscuits I can eat while I'm here. But
that's fabulous.
Yeah,
that's fabulous.
But yeah, I'll be heading back.
By the way, what's the food like over in the Philippines? Good and natural?
You know what? My nephew goes over there to visit me about twice a year, and he specifically goes over there for one reason, which is to just eat incredibly good down-home cooked kind of food. And the food over there, it's really the pork, and I'm from North Carolina, obviously the pork here is really good. They know how to do barbecue here, but I'll be honest with you, I would say that the barbecue over there is actually better. They know how to prepare pork properly, but there's a lot of seafood there. Philippine cuisine is not really noticed as the superstar of Asian food, if you know what I mean.
I do.
But it's the food over there is great, and I usually end up eating healthier. I eat like a pineapple a day, end up doing a lot of outdoor activities, get plenty of sun. But obviously when you go back here, it's a different story, and there's a lot of of things to get you off track here. But in general, to answer your question, the cuisine over there is good, and it's a great, healthy place to be, in my opinion.
John, it doesn't surprise me when I listen to you say you think you actually eat more healthily when you're over there. That doesn't surprise me a bit.
Yep.
John, I thank you so much for leading off with that daily box potential change on the S&P futures.
Yep.
As they're selling off, just as we're speaking, literally in the past 60 minutes, I see that bond futures, both the 30-year bond and the 10-year note futures, are in rally mode. Here's my question.
Okay.
On the bonds. The bonds into that January 31st peak, be it the bond futures, be it the 30-year yield on the cash bond, or be it the price of that instrument known as TLT, went to record levels and then reversed. And there's been a decline now of something like 10, 15 trading days. And here's my question. I'd like to ask you if you can look at those daily and weekly parameters of yours and identify what price level the bond futures need to get to enable us to put on a low-risk short sale.
Okay. So you're asking, I've got the 30-year up right now. I just want to make sure I understand your question. You're asking at what level, as it rises, do you want to find resistance to sell, or are you looking for an area to back the truck up and buy bonds? Is that like which? Maybe I didn't catch your question.
Yeah, the first, you hit it nail on the head with that first scenario. Yes.
Okay. The worm seems to have turned a little bit here as we traversed, and I'm looking at the 30-year at 149.04. Had the close below, we kind of rattled around, retested, and then we just kind of trailed off. If you don't mind me giving my opinion on this, I will just give it full force.
That's exactly what I'm looking for, John. Thanks so much.
Okay. Call me terrified to short bonds and notes. I don't know what you'd call it, but I don't have a lot of history going back here. I guess I could put more history on to build more profiles, but we've got enough information here to kind of focus on the 30-year right now with the two most recent profiles on the weekly. And Tom and I were talking the other day, actually on Wednesday afternoon on his show, and we were just kind of, looking at these bonds and notes and the pullback, and is this a change in venue for these things altogether from going from buy the dip to sell the rally? My personal opinion is it's still buy the dip on a long term. Now, there's some very good intermediate short term or shorter term opportunities to sell this thing, but right now, as long as we are, and this might not be what you want to hear, this is just my opinion, as long as we are sitting above on the 30-year, above this 144.08 down here, and I know we pulled back 5 or 6 handles on the 30-year, actually 7 handles it looks like.
8 handles, John.
8 handles, okay, 8 handles. Right, gotcha.
Go ahead.
I saw this thing go up 8 handles in one day in 2008, and that was a very painful day for me. But so the 30-year can move, as you know, John. 144.08. I'm still looking for any closes below that area. That's going to be a kind of a change in tide for the 30-year in general on the long term. Right now, we're still kind of hanging in there. And we talked about this the other day. The 10-year and the 30-year still looking at these long-term inflection points. I'm going to pull up the 10-year really quick just to kind of give people an understanding what I'm talking about here. Still got this 10-year area on that 127.27, 127.24 and the 127.27. We're trading about 127.28 right now. So these treasuries, in my opinion, are sitting on the precipice. There's the 10-year. Let me go back to the 30-year. We're sitting on the cliff right now, and all things considered, with the global rate environment, and there's seemingly been this attitude that U.S. Treasuries have to stay in line with global rates. And, these Eurozone, they're doing their buyback program. We're obviously kind of exiting that mode. But that being said, these global rates could start having a disconnect, as you know, and I think that's kind of what you're thinking, right? Possibly.
Go ahead. Yeah.
Okay. Yeah. So this is a big area. I mean, I've kind of passed on the dip right now, considering that when we traversed down below 149.04, it was kind of okay to be short, not okay to be long on an intermediate basis, and it was, missing that type of move down sucks as a trader. But again, I'm not a big fan. I haven't been a big fan of going short treasuries until we get some serious change in tide confirmations, if that makes sense. So what do we do now? Considering on the 30-year right now that we do have this yellow bar trying to appear, maybe a new demand area may happen, a new profile, if you will, on the daily, in conjunction with the long-term inflection point sitting here at 144.8. Remember, this is the bottom of the balanced area, this little DMZ down here on the 30-year and the 10-year. I think you've got to have a close below here to really start stepping on the gas pedal and then start using 144.08 as the leverage point on the way down.
John, can I ask you on that?
Sure.
I'm sorry to interrupt.
Sure, go ahead.
What you're doing for me is very helpful, so thank you. On the daily charts, you have obviously within your algorithms producing your TAS boxes, your highs, lows, and point of controls. There is data in there that gives you impending signals. Yep. And you illustrate that with a change of color on the daily bar, and we're looking at it right now live in Tiger TV, by the way, which is a beautiful thing.
Right.
With this bounce that we're seeing right here, with the color coding via your algorithms on that daily chart, does this guarantee that tomorrow a new daily profile will occur, or is it merely a clue?
It's a clue. It doesn't guarantee it yet. We have to actually close today with that still in force yellow or gold or whatever color it is. And then we definitely will see a new profile appear. But it's giving you a hint right now that we may have a new demand area pop up. And that's kind of the answer to that question. If you want to hang around through this break, I'll be more than happy to continue to discuss this with you.
I would, John. Thanks so much. I appreciate it.
Yep.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. John, you still with us?
John, I am. Thank you.
Great. These are great questions. I think everybody's going to benefit from just kind of hearing us air this out a little bit. I got the 30-year up still, and I've got the 240s up, our 240-minute time frame. And we always talk about, if you guys watch this show, you're going to probably get bored listening to this again, but we always talk about looking at the long-term slant on any instrument and then keep continuing to drill down into lower time frames to try to regulate the trade with profiles on shorter term time frames, and allowing this to kind of, as John had possibly, you might have caught some shorts lately on this. I hope you did. That 149.04 on the daily when we broke down. And again, just will plainly tell you, I've passed on some of these shorts. Because I'm looking at this as at a little bit longer term time frame. But as those 149.04s broke down, then you kind of look, and if you're looking at that from the short side, then you look towards these 240s, and you can get these within the scanner, all these levels, to regulate this trade down. And if you take that attitude and submit to that logic, you will see how this has regulated the trade down on the intermediate, looking at the daily breakdown, then looking at these 240s. That being said, we have come down into a little bit of a floor here on the very long term, and you've got to be looking at this. If you've been in that trade, you may have reached some targets, and like John had said before, we've come down 8 handles. All right,
John, that is I will focus on something you are highlighting right now, the weekly chart.
Okay.
The decline from the 152 area down to the 144, just under, has come down, tested, and not gone below decisively
Correct.
the bottom of the box on your weekly studies.
About a half a handle.
And we're bouncing a bit. And as I look at it, I say, "Oh gosh, this is terrific. We've come down. If there's a spot for a short-term low to occur, it makes sense that it would occur right here near 144. Your studies highlight that.
Yep.
So now what I'm preparing to do, and asking you to have this conversation with me for, is to say, okay, fine, we've come down 8 points. Assume or take the scenario where we've bottomed very short term, and we bounce a bit. Be it a day, a week, I don't know, 10 days, whatever. The question what I'm preparing to do is answer the question where do I find a low risk short? Namely, how far does it have to go up where I get to the point where I can short it, knowing that if I'm wrong, my risk of loss is small. So that's what I'm trying to construct right now.
I get it. I'm going to answer that with two components. I think you need to sit tight now because we've reached some major support areas down here that are going to have to be paid attention to. That being said, and considering what you actually want to happen, which that may be exactly the way to look at this. We've got this orange bar appearing on the daily. That means we could have a new set of boxes appear, and it would be really, really cool if those new boxes appeared in that inflection point at the top of our profile that might appear. And you're going to have to wait and see on this one because it's not a bad time to sit tight on this trade, on that short trade, if that's what you're looking for. Wait for a new box to appear, look at those inflection points after they appear, and really hope and pray that 145.19 or 146.20 is that bottom or top of the profile on the daily that might appear. I know there's a lot of mights and ifs and all that kind of jazz in what I just said.
And you're signaling that because that corresponds with a current profile on the 240s. Is that the idea?
Correct. The most important, powerful leverage I think you can get is when you have multiple time frame inflection points lining up in the same neighborhood. And right now you're below profiles on the 240. You can't really, there's nothing to glean information off of down here on the daily or the 240. Let's wait for the daily box to appear, and let's hope that one of those inflection points on the daily line up with our 240s, and we can leverage against that level while at the same time putting stops oriented on the other side of that.
Excellent. John, thanks so much for that. We'll look forward to listening to you and Tom live Monday morning down in Clearwater.
Awesome. Thanks for calling in, John.
Thanks.
Yep.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and I really want to thank John out of Philadelphia for the call because it does a couple of things. Hopefully it gives people some MOs and some education on how we look at the markets, but for me personally, going through that kind of process as a trader actually helps me because it kind of gives me more conviction and real serious inflection points and standpoints to go by for me in my own trading. So thanks for the call. That was great, and I feel like we covered the 30-year and the 10-year pretty well there. Here's the S&Ps. We talked yesterday on the show. I'm going to review how we kind of go through the process of this one also. And I've got the scanner up right now, and I'm looking at the breadth of these speedometers up here. And we're going to, you guys have access to this on TFNN, and my friend and partner in Chicago, Steve Dahl, he kind of pulled his hair out when I did this, but we gave you guys kind of the admin version of this. So please get a trial of this if you don't have it. It does give you a lot of really good inside information. Yesterday, talking about that inside information, we were looking at these new boxes attempting to appear above. We were at 12%. Some of those disappeared, but just the fact that this is a pretty heavy number up here gave us the idea that we might not need to buy breakouts on some of these profiles or kind of lay off the gas pedal when it comes to buying the dip, buying the dip, buying the dip, even on a short-term basis. And remember, we always look at things like, lose a little, lose a little, lose a little, make a lot. And yesterday, I just want to go through the process for you. This was above 12%, almost 13% yesterday on our daily, just looking at this right here, if you guys can see it. And we look at our profile chart, our breadth chart, and we want to kind of just kill the middle ground here. The middle ground did not ramp up. Okay. So as you can see that we didn't have a big change in the middle ground. That means that a lot of these stocks didn't actually go into that middle ground. I'm probably confusing people right now, but the bottom line is, and I'm looking at this from an artist view at this stage, but we didn't have a lot of these stocks have these profiles lock in. We've got a very similar neighborhood up there. Some of them did lock in, and the middle ground did increase a little bit. That means that some of these stocks fell back into the balanced area. All right. But the fact of the matter is, we're talking about shorter term, sit on the sidelines type of mode and not getting heavy on the shorts, because our long-term views are still very breadth positive. If you look at the weekly and daily, and our automated systems, some of the automated systems that we work on, they are very heavily dependent on this type of mode, whether to block out the short side or the long side when you're kind of looking at the markets, whether to buy support or sell resistance. Okay, that being said, let's go into the S&Ps while we're doing Friday Education Day, I guess. We are looking at this, and we talked about these inflection points yesterday, 2093.65 and 2082.85. Let's just call it 2083. And yesterday's show, we were kind of rattling around in here, I think, right in here. That's about 24 hours ago. And we talked about using this on a short-term basis to possibly enter some shorts on a very contra-trend type trade. And any closes below this 2083, we're going to have to really be paid attention to, that we may start revisiting 2071.72, that weekly unfair high. So you got a fence here, if you will, to lean on at 2093, 2094 up top. We've obviously had a little bit of a rally this morning. That's what stops are for, by the way, the lose a little, lose a little, lose a little, make a lot. This was something that was just a little nerve-wracking for me yesterday, considering that we were looking at those new boxes appear 12%. But we also talked about this possibility of a new profile appearing on the daily, and that happened. And we also opened up the show talking about the 72, 74 area down here. I'm going to probably lean towards this entire fair auction being explored possibly. But remember, you got to keep your stops in, and that 2090, 93, 94 area, if you're going to try to short against the long-term trend, you're going to have to look at that, in my opinion, as something to orient stops around, with targets only being right now 72, 74. Okay? And that is kind of a combination of all the things I just spoke about when it comes to breadth. Whether we're above or below profiles, is it okay to be long, not okay to be short on a long-term basis? And are we seeing some cracks in the armor a little bit here? And that answer may be yes. Now, some of the automated systems, we look at the 60s for triggers, and this 60 breadth, as soon as the market opens, we're just kind of still hanging in there. But when the market opens, some of these stocks are going to possibly have lower prints. This may fall over, and you will have some more things on your side, and the 240s may cross over too. So if you've got the scanner, you'll see that in a real-time manner. And I just obviously love that scanner, because it serves two purposes. The tide of the marketplace, as Basil coined it, I love that term, with the breadths, and then also the ability to filter instruments to find exactly what you want to find relative to profiles globally in about 2,500 instruments. So any other calls into the station, we welcome them, and we'd love to go through some of the scenarios for folks, because I think a lot of people may benefit from that. Now, again, you got the Greek thing seriously affecting this euro. I've got the euro up right now, and I kind of admire Germany for what they did fundamentally, just telling, Greece, like, hey, look, put up or shut up. We're not going to keep going down this road of forgiveness. And, obviously they don't really care if the Greeks punch out of the European Union, they go into default. And that may be the best thing for the euro in general. So that being said, we talked about this 114.47 area being the magical area to continue the gift that keeps on giving trade. And yesterday we reached a high of 114.50. So we were 3 ticks off of that, coming right into the inflection point. And now you're down about, 150 ticks off of that. So going back to what John originally brought up, where do you wait patiently until we have some battle point areas to choose from? And this was the case. Let's wait until the market comes to you, until we have a high probability level to attack, and then orient stops above based on your appetite for risk or the noise factor that you want to give this thing. Just like over here, I mean, this is no guarantees in this. You got to put stops in. And I'll say that till I'm blue in the face. Anything can happen. Remember, bonds went up 8 handles one day in 2008. Anything can happen. All right. So that's the education on the euro here. And we also talked about the dollar being at ripe opportunities on the long side, looking at support on this thing, and orient stops below 93.67. I know we rattled around there, but I'm looking at this again from an intermediate to long-term basis, and the green light is still on for the longs on the U.S. dollar until we breach that inflection point. And that's obviously lining up with the euro in an inverse relationship on its resistance levels. I hope that makes sense. Okay. We've talked yesterday about opting out on the gold trade right now. It's just not a lot to leverage off of on that trade. So we're just going to kind of stay away from it. We also talked about the 5104 in crude oil, but I got to revisit this now because we've got a new profile that's appeared, and now we've got some new inflection points. But remember, these previous profiles still have a serious relevance on what's going on in the current landscape. Now you got targets above on a relatively thin profile, comparatively speaking, looking back. 53.54 is the targets up top now, and I'm still looking at the fence right now at 5104. Okay, you do have, and you're right in the middle of this profile right now. There's not, it's not the ripest opportunity in the world, but we've talked about this. There's a lot of overhanging supply. There's a lot of overhanging fundamental news out there to be bearish on this product. There's a lot of hedge funds that have gotten massively short, which I love it. I love to hear that. That doesn't mean that a lot of times you're on the wrong side of the market if you're long crude oil. It means that there could be a massive squeeze play coming up. And I'll be honest with you, a lot of these hedge funds have just been wrong as heck. That's just the way the ball bounces with those guys. 53.54, again, the target up top. And just all kind of stops need to be below 49.27, even if you're going to try to pick battles at 51.04. But again, just to kind of give proof of concept here on the XLE, obviously gap down, and that was below that yesterday's inflection point. That was a stop out. Now you've got a new profile appearing today, and or actually that appeared yesterday, and we're trading 80.93 right now. We're back above this area, and the XLE, I mean, I'm just kind of going to have to sit tight on this right now on the XLE. We caught a good move there from 74, but right now that's kind of a wait and see because you've got new supply up there. Somebody asked me to look at natural gas, and do we have we actually had a close above that 28.16. We talked about the only way to start nibbling on the long side was to get a close above there. That happened, and we've kind of rattled around there, but targets above 3.031 up top. And that's the way I'm looking at this, as still staying in a downtrend, but coming back up into resistance levels. And again, a close above there will give this the first technical damage it's had for shorts in a long time, and then that could actually gravitate north. But we're right in the middle of a fair auction now, and that's the targets up top if you're looking at that from the long side, in my opinion. Take a look at a couple of stocks here. Where are we at? Okay. Bank of America. Reason I'm looking at this, here's our weekly view. I haven't been really a big fan of the XLF. Looking at this and the latest moves in the S&Ps, we actually did come down into some inflection point 1610. Any breaks below there, and I'm going to reference I don't think this is a buy. I know we've come down into support. I do not think this is a buy. This is an opt-out situation here, in my opinion. We're going to have to reference the XLF. This has been seriously on my radar screen here. And we got 2427 came off there. I think we could just kind of continue to relax here downward on the XLF. And here we go. And this is our 240 situation on the XLF. So we kind of started breaking stride here too. Stops oriented above 2447 now on the XLF, and I think Bank of America is not a buy. I had some phone calls about that. Let's take a look at Facebook really quick. This is on a lot of people's mind. We had a big day yesterday, obviously. Big time weekly inflection point, 79.27. This is also on the scanner. And here's the daily. In my opinion, this is not to be shorted against this inflection point up top at 79.27. We're trading 79.42 as of yesterday's close, and this morning we're trading 79.38. So today is Friday. The reason I'm pulling this up is, again, you had no idea that was going to move like that yesterday ahead of time. But a Friday close above this inflection point is going to be pretty powerful, and then you can orient stops around that for this possibly to go higher. Somebody's asking me to look at AXP. Some folks are playing around with this. Talked about not really the opportunity to go long yet. We need to see some new profiles. And by the way, and this is in your scanner if you've got it, given these levels real time and all the lower term time frame levels. Now you've got something down here, 7803. The market may pull back here, and that may drive this a little lower. You got some market relevance from a relative strength standpoint, weaker stock in a strong market. I'd stay away from this. I think you got better things to play around with if you want my opinion. You've got a maximum leverage point now at 80.74. I know that's well away from where we're at right now, but again, I wouldn't play around with this catching a sword situation on this. Yeah. Okay. We're looking at it from the short side. I love it. I like looking at this from the short side. I thought you were trying to look at it from the long side. Yeah. Just sell-offs below 7803 I'm a big fan of, actually, and using that as a stop-oriented situation. And if we can get a close below this 7803, this is the kind of thing I think you could press the gas pedal on, actually, especially if the market gives it some help on the downside. Exactly. All right, guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We're kind of finishing up about AXP, talking about, let's just now we got a new profile appearing, and that's going to be very damning for this thing to be below 7803. Is that what I mentioned? The XLF in general, and talked about a weighting of AXP in the XLF. I'm pulling this up from what is this? The Sector SPDR.com site. There's AXP 2.34%. That's exactly what it is. So obviously this has been a relative strength against the XLF. It's kind of like the Johnny Yuma of the XLF right now, just getting his ass handed to it. Excuse me, getting his butt handed to it. So it's kind of the rebel of the crowd, and if the XLF turns and the market turns, this may actually come unglued even farther. So that's my thoughts on that one. We got about 3 minutes left, and again, we've talked a lot about, I know, I got a fine on that one. Sorry about that. We've talked about the S&Ps in a general sense of a little mixed up right now. Got a new profile appeared and locked in on the daily. You got to pay attention to that. And that 72, 74 area would be the kind of the pullback for the buy the dippers, so to speak. And that's the way that works. So I want to go back into, we talked a little bit about Facebook. I want to pull up everybody's favorite here. I don't use Apple products myself. I probably should, I guess. Nothing. In a nutshell, I'm kind of stuttering here. There is no reason to short this stock right now. That's the short side of the marketplace is completely blocked out on all levels. And if you go into the scanner, you'll see that. So don't try to be a hero and overthink this too much. If anything else, it's probably going to go higher. And I got a lot of calls about that. I was like, there's really no reason to get out if you're long at this stage. Let's take a look at GE. This is another big stock that we were kind of focused on. And new profile more than likely will appear on this. So you got some new inflection points here. You had a pretty good ride on the stock with a really good dividend. So sit tight on this one and wait for the inflection points, and you may actually have a chance to gauge this a little bit differently. Right now, that is a sign of new supply starting to happen. Just letting you know. And we haven't looked at, we didn't look at gold. We're going to pass on that, but I am going to look at something else here. We're going to take a look at the healthcare sector, which when I did some recent research reports on this was one that was just, man, it's like John Gotti Teflon proof here. And Orient stops with your appetite for risk below 69.34 is still the case here. I think this thing's going to probably battle any market issues going on. And we want to take a look. Also, somebody else is asking about the technology sector. Obviously, this thing is talked about not shorting that on those upper inflection points. We're going to take one more look at an index before we go. We're going to take a look at the NASDAQ really quick. No signals yet on the daily on the NASDAQ, so this is kind of a wait and see. You do have some 240s that are appearing here that are getting a little wider, but I'd remember what we talked about the S&Ps and the breadth situation, the new inflection points, and we may have a little bit of a relaxing mode in that index in it for just a little bit here, but don't take that as the whole tide is turning yet. Thanks, guys, for showing up here on Friday. It's been my pleasure. And John, thanks for the phone call earlier. I think everybody got something out of that, I hope. We'll pick it back up again Monday, and I'll be in Clearwater, and Steve Rhodes is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.